everyone, and welcome back to another episode of the Silicon Dreams 1550 AM. I am your host, Sharlaine, and today we are thrilled to welcome Prasoon Agrawal, co-founder of Hercules Ventures. With over 13 years of experience building and optimizing products for successful startups like IndiaMart, Redbus, Prasoon has also co-founded multiple ventures across India, Singapore, and Kuwait. A seasoned speaker and problem solver, he is dedicated to leveraging blockchain technology to transform the financial system, making a lasting impact on the future of finance. On that note, we would love to welcome you, Prasoon, to the show. It's great to have you today with us.
Thank you for the wonderful introduction, Shari.
Absolutely. And I think with that, we want to dive right into your background, your career path, how you started. So tell us a little bit about your background, how you came to join Hercules Ventures, and what drew you to the venture capital space, and specifically to investing in Web3 technologies.
So yeah, I've been doing business for most of my life. Started my first fund investing into stock markets when I was 15. And then I co-founded 6 companies in India, Singapore, Kuwait, and Dubai. While I was in Singapore, one of my automobile company, which was funded by Singapore government's investment arm. That's where I actually learned about economy and investments a lot. People in Singapore in that building were open to share ideas and teach us so many things we learned there. And from there, I came back to India and started the first fund, which was investing into women-led founders in Asia. That didn't quite fly, but at the same time, I got opportunity to start a crypto fund, primarily because I was trying to sell 100 Bitcoins to somebody in 2015, and then he realized that Bitcoin has gone big since then, and he was curious to know what am I doing in that. I had about 30,000 followers on my LinkedIn, and a lot of them have moved into Web3 now, and he assumed that I would be knowing them personally, or I might have those connections and I'll be able to bring in good deals to the table. And that's when we started the first fund. We did pretty well over there, and I learned the new things in Web3, which were very different from the traditional Web2 businesses. And that's where we started. After that, I started the first proprietary capital fund called Mysteria Capital. And from there, we started Hercules. A lot of people in Mysteria are also there in Hercules. So it was a more of a transition rather than joining in Hercules. As far as Web3 is concerned, so the only thing what I feel has changed in Web3 compared to Web2 is people no longer have to consider only about profits and revenue, but also look at how to build a sustainable economy. And that's what Hercules focuses a lot on as well. My first lessons on economy was taught to me in Singapore when I learned that very interesting scenario actually. The government was matching investments of VC. So if a VC has invested 500K, government would match that investment. And when that company grows, a VC is in a position to buy government share at a very small premium, let's say 10 or 15%. So imagine a scenario where the company has gone 10x and it's worth now $5 million.
Yeah.
You're able to buy that for 600,000. It's a free money. And that was like very, very weird for me. And when I inquired and I realized that they don't care just about profits and revenue. When they run such programs, a lot of VCs from around the world would hop into Singapore, and then a lot of founders will hop in. And once they make money, they will keep on rotating that money in Singapore dollars within Singapore. More ecosystem would grow, and that would increase the velocity of Singapore dollars. And that's why the economy will increase, which will trickle down to other businesses, whether it's real estate or any consumer product for that matter.
Right.
So that's where my first lessons on economy, when we learned the similar thing in Web3, we formed our thesis that every Web3 product is a digital nation. Today, if you look at Web3 in general, compared to Web2, so Web2 is basically, I mean, if you talk about economies, it's dollar in US, pound in Britain, INR in India, and they're all geopolitical economies, wherein if you are in India, you're majority of the time denominated in INR. And if you are in US, you are majority of the time denominated in US dollars, primarily because you trust the government, you trust the GDP, you trust the army, and you trust the whole system. And when you move for a short instance, let's say if you come to Dubai, you will convert your native currency into the AED. And when you go back, you convert it back to your native currency, the leftover money, if it's significant amount. That's primarily because you know that all your future expenses are going to come from that INR or dollar. But in Web3, as an economy, it's not based on geopolitical area, but it's rather based on the purposes. So if you believe and you have certain holding of, let's say, 30 different tokens, you will continue to have that whether you move from one location to another location. And that's the most interesting point. We have identified like three important pillars.
Mm-hmm.
Number one is trust. What do we do so that people trust the economy and
Yes.
put in their 10, 100,000, $10,000 or 0.001% of their net worth or 10% of their net worth in an economy and do not exit. Just the way people hold all their lifelong effort or forefathers' effort in the form of dollar, pound, or rupee and do not exit. They know that all their future expenses and everything is going to come from there. And also they have a perception that it will not fall beyond a certain point because of inflation. It might go to, let's say, 10% up, 15% up, but not beyond a certain point. And that perception needs to be created with enough trust. That is what builds the trust, and that's the number one pillar. Number two pillar is consumption. Consumption is very important because if you look at any economy, when the consumption increases,
Yeah.
the economy becomes more stable, and
Mm-hmm.
also the economy. What I'm trying to say here is that consumption beyond basic needs.
Yeah.
For example, if you are a person who's a billionaire in a small country and there's nothing much to do, you will start buying cars and other things
Yeah.
which from other countries, and you will start buying houses or stocks in other countries. Every time you do that, you're basically selling your currency to buy those,
Absolutely.
and hence having a huge consumption is important.
Mm-hmm.
And the biggest consumer in the world is also the biggest economy, which is USA, right? And the same way Web3 projects also need to figure out how they will constantly bring more consumption. And often the consumption is one for the primary purpose of the product. Second
Mm-hmm.
is be primarily for social aspects, things like bragworthiness, lifestyle, and emotions.
Mm-hmm.
Just the way you buy a Ferrari, not just for the basic needs, but to brag, to get the bragworthy rides or the
Yeah.
comfort or the lifestyle which comes along with that. Uh, and then the third important pillar is people. Every economy is built around people, and whatever I said so far is not even relevant if there are no people. If you take out 90% of US population, there is no consumption, there is no trust,
Yeah.
and there is no innovation and GDP as well. And that's why every economy, what we see today, started with small community of people liking each other first, and then started trading with each other in whatever format. And then we see today a sophisticated economy. Same way in Web3 also, we need founders to understand that the economies will be built with people, and they come in the form of early adopters, in the form of users, investors, ambassadors, and influencers. And then towards the launch and post-launch, we go into the phase of creating new customers who by default think that if an influencer or anybody is building a good product, I should get in because I will get in at $1 and I'll make something slightly more than that.
Mm-hmm.
But we need to change that thought process from the basic idea of that will pump in price, but it's a good product. I should use it. And
Mm-hmm.
then some even smart people will think that this is a good product and there'll be enough number of users, so I should now buy and hold it. And this completes the whole ambit of economy where you have traders, speculators, users, and holders. And that is what we look for in Web3. And that is why my primary motivation to come into Web3.
Absolutely. I mean, I love the journey, especially starting at the age of 15 and then growing from then, like you said, it was rightly said that, Web3 is all about how to build a sustainable economy. And that's what you guys are looking forward at. And the three pillars that you mentioned, trust, consumption, and people. And when you spoke about people, of course, Web3 in specific is all about its people and the community. So, that is rightly said and rightly put. And now getting into the promising areas of investment in Web3, since I know that's your forte. I was reading an article on the website itself, the Hercules website thesis, and it discusses the importance of attention capture and category building in Web3 in the space. And it highlights several areas where investors see potential that include DeFi, NFTs, and gaming, which is coming up, right? So could you elaborate on what you see as the most promising areas of investment in Web3 and why?
For us, I think everything which can build a sustainable economy
Mm-hmm.
around an economy is important. And that's why, I mean, everything, if you look at, has a unique reason why it is relevant in Web3. For example, gaming.
Yeah.
Gaming gives so much, I mean, because I've been involved in gaming a lot,
Mm-hmm.
gaming gives so much of freedom to the people, to the gamers. who are part of that economy. And let's say any gamer in the previous world would uh, do a journey of playing a game for 2 years, 4 years, 5 years. At
Yeah.
the end of the day, the game is dead. He does not hold that anymore. Second is he does not have any way to prove the provenance of how he played against other players, and he does not have the true ownership of assets. He does not have the moments captured forever with him from the project, but Web3 can provide all of this and
Mm-hmm.
much more. I can go on and on with gaming. Same applies with NFTs. NFTs, I compare that very much to what we saw as stamps or stickers or letters and antique things in the past.
Yeah.
The difference here is that now people can have it online forever.
Yeah.
Even if you look at stamps, compare that to stamps very well. There you have to physically maintain them, and sometimes you might be in a position that you have not purchased the original one and you've purchased something wrong for a very high price. Lot of challenges in physically moving stuff, lot of challenges in verifying them, lot of challenges in putting up the right price across the world, because you might be in some part of the world and the best buyer might be not even knowing about it.
Yeah.
But in Web3, you can put all of them to a single table, solving all of that problem at one shot, and hence it makes a good sense for NFTs or stamps as well.
Mm-hmm.
Tomorrow we might see that every portion of a stamp is coming online in the form of NFT as well. Or maybe companies are building brand loyalty or in the form of NFTs,
Yeah.
which could show everything you have purchased in the past whole of your life, and it could be given away as a legacy to your children or maybe anybody else. So that's why every category is trying to create something which was not there earlier,
Yeah.
rather than thinking from the point of view that okay, Web3 is hot and let's do it. The idea should be that okay, Web3 has something to offer, and how I can use those tools, services, and benefits to change the very industry I am in right now.
Yeah.
So that I think that applies to a lot of different domains and categories. And whenever we find that this particular category might have natural organic users
Mm-hmm.
on a longer run, maybe in the initial few products might not do well, but for us also to understand what should be the right formula of running that economy or building that economy, I think it's very important to understand early bets on and then learn and grow with them so that when there's a right product, it just flies and works.
Absolutely. I mean, and gaming is an industry like you started off, and I think everybody is attracted when they say gaming, and then they say gaming in Web3, and people are very intrigued and try to understand the difference. And like you said, it does give freedom to the gamers. It gives them true ownership, and like you said, moments captured. And with NFTs, of course, it's like a forever stamp. They have something to keep forever, and everyone is unique, and you get that at the right price in the market, as opposed to a lot of original stuff that you get in like just like the stamps and things you said in the real world today. So that is definitely insightful. And speaking of investments in companies like this, there's definitely the risk factor involved. So how do you balance the risk of investing in early stage companies with the potential for high returns in the Web3 space?
There are a few things when a company is like really early stage, we try to invest in all stages. But if a company is specifically in very early stage, we try to understand what the founder is building. Does it matches with the current trend? Is he able to think through the Web3 economy part or not? And the most important thing is we become hands-on with them if they are very early on. And we try to then identify whether the founder is ready to adopt and learn and share with us so that we can help them. We can bring in other VCs who can help them and then try to grow that product. If the founder is really willing to work and grow the product,
Yeah.
I think there is very less chances of failure because he can constantly pivot if there is a roadblock.
Mm-hmm. Absolutely. And yeah, so for the listeners who are listening to this, I hope you've taken your notes on this one. And now talking about also the advantages of Web3 over traditional finance in general. Okay, I'm just going back a little bit. I know you spoke about this, but I just want to get a little deeper. So, also the article that I was reading mentions that Web3 offers unique advantages over traditional finance, which you did mention, which we all actually kind of know. But it includes composability and transparency and automation. So can you elaborate on how these advantages kind of create investment opportunities in the Web3 space?
I think one of the most important part when it comes to point of view from the retail is, I think we are talking about from the retail point of view, not from the investor point of view,
Mhm.
is that they can be assured of whatever is being promised, uh, is if delivered, they will get the rewards. I think
Right.
that's the most important part. Compare that to Web 2, that if you are part, first of all, you are never part of economy. If
Mm-hmm.
there is a Web business, you're only part of it from the profits and revenue point of view. But now you
Mm-hmm.
can be part of the economy as well. That's one of the biggest benefit any investor would see. So that what I'm trying to say here is that economy might be big or small, but if
Yeah.
it is sustainable enough, it will still work. It could be an economy of yoga practitioners with just 1,000 people, but if they continue to spend that $1,000 for the next 50 years of their life, this economy will be sustainable for next 50 years. I often give the example of Starbucks, which everybody understands. Imagine if Starbucks wants to start its own token called Star Token,
Mm-hmm.
and you are an avid coffee drinker spending, let's say, for example, $5,000 a year, or let's say $500 a year.
Mm-hmm.
And what if I say that, what if you give me $3,000 upfront and I'll give you whole 5,000 cups of coffee? And the next thing, so you will agree primarily because
Yeah.
there's a proof that Starbucks was once upon a time the largest cashback loyalty program, and hence people would do that.
Mm-hmm.
But now imagine if I say that you are not going to drink all the 5,000 cups of coffee tomorrow, and
Yeah.
hence you can let them, you can bring in Coffeefy or whatever, and people can use it, and
Mm-hmm.
you can get a small reward on that. So now your 5,000 cups of coffee can become 7,000, which means you can use it for 1.5 years. And then I come up and say to you that there are 10 million customers in Starbucks, and in the Star token economy, there are only 100,000, which means there's many more to come. And there's only limited number of tokens which are going to be issued ever. And
Yeah.
there's only limited number of coffees which we can produce across all the stores in the world. And
Mm-hmm.
now you need to hold it because you know that more people are coming in. And once that happens, you know that the economy is constantly trying growing from there. The best part about this is that it's an organic economy. And even if the markets are volatile, it moves up or down, the taste of coffee is not going to change. And you'll
Mm-hmm.
still continue to drink coffee. And what you have paid as $500, you have definitely got much more number of cups of coffee compared to what you would have got in the Web 2 world. And hence, there is no reason for you to exit. There is a reason for you to hold. There's a reason for you to go beyond and now communicate with whatever they are trying to build in that economy.
Mm-hmm.
I think that's one of the biggest pullers. Now, this scenario, the person was not even an investor at the very first place.
Yeah.
He was just a consumer. And in a way, when he learned that he can now be part of something where he has spent money naturally, where he would have spent money otherwise as well.
Anyway.
But now he kind of has become an investor
Yeah.
silently without
Mm-hmm.
anybody, without he realizing that in the very beginning when he came and gave that $500.
Mm-hmm.
So the different ways by which people would become part of the economy. One is direct investment. Like I said in the example, some of them will be happy to become users. Some of them, even
Yeah.
smarter than them, will think there will be enough number of users in
Yeah.
Starbucks economy because they have got large number of customer base. I
Yeah.
should just buy the tokens and hold them,
Mm.
right? So, so people know that if the obviously in Starbucks example, there are some challenges that what if the company does not uses the revenue to buy back the tokens,
Yeah.
or what if it is not enforced?
Mm-hmm.
That's the challenge. But if that's addressed, which is the case in DeFi, you can program that if certain things happen, the X amount of revenue will automatically be used to buy back the tokens. It can happen in the games. It can happen in any digital product, which can where it can be programmed. But
Yeah.
if it's a physical product, we have to trust. But the idea is that people will be able to see at least what's happening,
Yeah.
how
This
much
that's
revenue is created, and
yeah.
how much, in the worst case scenario, even in the offline case, they will be able to see that how much on a regular basis that company is using to buy back their tokens, or how many users are using fiat to buy the coffee, or how many users are using tokens to buy the coffee, and how many of them are constantly becoming members and putting that $500 worth of tokens or whatever. So
That's
that
right.
is something which Web2 world cannot give you.
Yes, absolutely. I mean, being a part of the economy, nobody would even think of it, and like you said, it has to be sustainable, but it could even be a small economy. And I think transparency is also one of the key features of Web3. And that's why a lot of people want to, everybody wants to know what's happening with their money. So that's the beautiful part of it. And speaking of money, I know that you've been a trader for 22 years or more, if I'm not mistaken. Yeah, is
Yeah,
that?
something like that.
Yeah, so that's a long time. And, I'm pretty sure our listeners would love to hear some trading tips or tricks that you think could work. I mean, I know it's everybody has to DYOR, but something that has helped you over the time.
Something which has helped me the most was, I think, long time ago, the
Mm-hmm.
time when I didn't had salary. I created a method called salary method, which
Okay.
didn't work the way it is working in Web3. In Web2, it could not work very well
Mm-hmm.
because the divisibility was limited. But here you have so many decimal numbers that you can divide anything into any fractions possible.
Mm-hmm.
What it says is that, let's say you buy an asset, let's say you buy Solana at $10.
Yeah.
You sell 10% of your bag on the every 20% rise.
Mm-hmm.
The first thing will happen is your bag will never become zero. Second thing is every time if it's going up, you are getting some returns cashed out, which you can use. So back then I used to call it salary method because it would give me some salary in the
Yeah.
form of exits, automated exits.
Mm-hmm.
What I also do to extend it, if let's say we are starting now, which is like we kind of people in Web3 believe that it's a bull market coming. So you believe that, okay, for the next 1 year or 1.5 years, it's going to be upside only. And you also want some money on the side. So you can implement this where in every 20% rise, you sell 10%, 15%, or 20% of the bag.
Mm-hmm.
Second is you can always put a buy order 15, 20% below your average selling price. So let's say you have sold 5 times or 7 times, your average would be somewhere in the middle. And if
Right.
you put 15, 20% below that,
Mm-hmm.
and you have just repeated it 4 or 5 times,
Mm-hmm.
your average buying price of $10 Solana would come down to $5 or $3, which means if Solana has performed 50x for the rest of the market,
Yeah.
for you it will perform 150x. So that's something which has worked the best for me because then you're technically not trading. You're just longing for 1 year.
Mm-hmm.
But every time it's bloated up, you constantly sell automatically and you put up a buy order just 15, 20% below your average sell price. 90% of the time it will hit the buy order again
Mm-hmm.
and you will be able to buy back. In the case if it's not hitting, which means it has gone too much up and maybe it's time to switch on to the asset to a new asset because let's say if Solana has gone to $400, it might not do another 5x from there.
Mm-hmm.
And some other asset which has not done much, maybe it can go there. And also one interesting thing which reminds me on this is that in bull market, you're always short of capital because you're always deployed. When
Yeah.
things go crazy, everybody just starts putting in money and
Mm-hmm.
there's always new opportunities we come across and then we realize that we don't have much money left. So this method might also give you some offspring money, even because either because you have sold multiple number of times or that particular token has gone so much up that you don't want to buy back anymore and you want to get into some new token. So I think this is what has worked for me the most.
Awesome. Thank you so much. I mean, the salary method, that's a very, intriguing name. I think when someone just hears of it, everybody, I think especially in a country like India, everybody goes crazy when they hear the word salary. They're like, okay, what do we expect now? So yeah, that's a very, thanks for that. I think our listeners again would like, be taking this down and I know I would. So yeah, and coming to that, our last question for you is for our listeners, the entrepreneurs and everybody else aspiring and, building in Web3. So what is the one advice you would give to entrepreneurs looking to start a Web3 company or who have already started and they're, pulling through? And also what are some of the common pitfalls they should avoid and, some strategies to help them succeed?
I think few of the things what people go wrong with is that Web3 is very hot, so let me also start this company. And they might come from a Web2 idea.
Yeah.
It's not bad to come from a Web2 idea, but what's wrong there is that if you start thinking that I'll be able to raise more money in Web3, or I'll be able to run it easily, or I'll be able to make a more successful product. The most important thing I think there is that we have to understand that whether this product even needs a token or not, and if it needs, how will it create again a sustainable economy? Because if it cannot, you don't need a token. And
Mm-hmm.
if you don't need a when probably majority of the investors would not invest in it. If you want to still continue into Web3 company, then don't launch a token and rather show it as it's built for Web3, but we don't have an economy of our own. We may adopt either some other economy like US dollars, or we may adopt something in Web3, maybe Ethereum, Bitcoin, or something else. That's, I think, one of the most important thing which founders should look at, that how it does fit into the Web3 culture, and how does it fit into creating my own economy with that token, and how does it adds value to the current set of users, which is very important, because timing is very important. If you are building a product which people in today's, I mean, the user base of Web3 is not as big as Web2, which means it's limited and their thought process is limited. And hence, are you building a product which the same user might use it in Web2, but might not use it in Web3?
Right.
You have to look at the angle that what would be that option for that. And I think these are things which are most important.
Right. Absolutely. Thank you so much for that, So, listeners, if you've got that, the two things that I picked on were, when you're building something, think about whether it fits the Web3 culture to start off, and also focus on your target audience, to understand what the needs are and whether they will be using it, and, whether it's going to be sustainable and scalable. So yeah, thank you so much, Prasoon, for sharing your insights and expertise with us today. We come to the end of today's show, and it was a lovely one. Thank you so much for being with us. Awesome. And to our listeners, make sure you DYOR, do your own research, and stay tuned for more thought-provoking discussions on the Silicon Dreams. Bye-bye.